Welcome back, everyone. As those of you that followed and voted on Twitter would know, tankers was your choice for my next video. Now, it wasn't the one that I was thinking of doing before I set up the vote, but you picked, so here we are. Now, quickly, what can you expect from this video? Well, there's a lot of intermittent topics and a number of perspectives that I wanted to include here just to lay out some of the basic information, some of what's going on, and try and weigh both sides of the bull and bear case. So that's what I'm hoping to do. It might feel a bit scattered because there are bits and pieces of a lot of different things, but I wanted to get to a lot and I didn't really want to drill into too much because a lot can shift very quickly. So one thing I kind of needed to throw into this video or point out is that there are a number of different types of each, both clean and dirty tankers, and each of them have their own, well, size and interlinked but separate markets. So different routes with different types of vessels have different pricing, and so from that, it's impossible to know uh, generally what the price of a certain thing is based on just one factor. So you can find all of the information, but it's just very, very, very piecemeal. And the other thing is, if you look here at the types of tankers, the number in brackets is the deadweight tons. And so you can look and you see, well, Aframax and LR2, and well, lo and behold, same size ship. And so you have to realize from there, the LR2s, for example, this is just the example that comes to mind because it's being done in certain places, but the LR2s could pretend that they're Aframaxes. So there's a lot of different and semi-linked markets that you have to be aware of. Now, none of this right here is investment advice. Nothing I ever do is, but here are just some examples of some different companies that are both in clean and dirty. So you have in clean, you have Scorpio Tankers, you have Torm, you have Ardmore. There's more, but these are just some examples of varying sizes. In dirty, well, you have DHT, which is a VLCC pure play. You have Euronav, you have Nordic American, which is pure play in Suezmax, I believe. And then you have you have plenty more examples than this. This is just a few. Then you have a number of mixed, both clean and dirty, uh, companies, and for example, Diamond S Shipping and Tiki Tankers, amongst others that are not mentioned here. And again, if I didn't mention something here and you own it, yes, I'm an idiot, but that's not why I didn't mention it. I just didn't put it in. So we did not ring in the new year with a super spike. So for those who are expecting that, that hasn't happened yet at least. Now, the fourth quarter of last year was very strong, and there was a lot of anticipation for IMO 2020, and the many tankers of many different sizes were making a lot of money. Now, once the new year came, rates stayed high-ish for a week or two. Well, we're only 2 weeks in, but then they have started to decline. And to those who have watched the tanker markets for some years or have seen graphs of the past, they would know that it is regular for tanker rates to decline in the first quarter. So whether people were expecting them to stay high, decline less, decline more, it is regular that they decline at least slightly going into the new year. Now, I cannot reiterate this enough when it comes to tankers. Rates are very seasonal. Q4 is generally the strongest point in the year. Q1 is a bit weaker, and then depending on if you're talking about dirty or clean, being product or crude, I may have said that backwards, but you know what I mean. The bottoming happens in the summer months, and then we head back towards Q3, Q4, which is again Q4 the strongest. So one has to keep that in mind when looking at tankers and whole year long profitability. So what we are starting to see a little bit and in isolated instances this year is the mess with the fuel change. Now, the change in regulatory compliance for the fuels is causing certain disruptions. Mainly, in some regions, the VLSFO, the new blended fuel that is able to be used without scrubbers, is not always compliant in every region, meaning there's some vessels that have been warned that they're not using compliant fuel. And so they'll have to fix that. And in the meantime, they have to figure out how to fix that, and that's causing some disruptions. In other places, the the fuel from last that was built up over last year, the VLSFO, was is being depleted. So there were stockpiles that got built up, but not enough. And so, which means this year they will need to have some more fuel moved into the right places so that the ships can fuel themselves. Now, to those of you that are wondering why this is, it's because the old bunker fuel, the HSFO, I think that's all right, is made as a byproduct from refiners. So many refiners, particularly outside of the Americas, are not making haven't been fixed to make the right fuel. So the old fuel is immensely oversupplied, whereas the new fuel is still needing to be made and brought to the right places, which is good for business for those that need to take it to the right places, but not for those who are in those places and need it. Now, each company has had to make their decisions whether they wanted to purchase scrubbers or purchase the new fuel in advance or some combination. Now, personally, I think that those that have added scrubbers are in a more fortuitous position right now because they have spent the capex and now have reduced opex going forward, meaning they've spent the money once on the upgrade, if you will, and now down the line they don't have to worry about uh, the availability or added cost of buying the more expensive fuel. Now, when asked, people have been asking which I think's better, which I prefer, and that's that. But that's the scrubbers are what I generally think is better. But there are other cases. For example, Euronav bought a lot of the new fuel um, before the change, and so they have a lot of that fuel and can run their vessels for a whole long while with the new fuel that they bought when it was not in question. So we don't know how long the spread is going to last. We don't know how long if there will be availability of supply after. But the point is, it's up to the market. It's very possible that eventually the spread will close, but who knows when. Now, one interesting thing that I did see recently was there was a story about three Greek shipping magnate billionaires, whatever you want to call it, people that have a history of doing profitable deals for at least themselves in shipping. And they have bought some secondhand, very large crude carriers for 106 million. Now, why is that interesting? Well, to me, that's interesting because you can buy new VLCCs cheaper than that. However, they'll only arrive in a few years. So it's worth thinking about, okay, why would they buy for more than a new one now unless they thought in the near term they could make back the difference and then potentially more. So I don't know. Is it a good sign? Well, if you think they're right, then probably. If not, or if they had the wrong idea, then, well, doesn't matter. So another similar anecdote in terms of VLCCs is that the VLCC CEOs seem bullish. And if you're rolling your eyes, I am too, because we all know that CEOs want the shares in their company to just go up no matter what. But the point is, a few weeks ago, the 1 year VLCC rates, that is to basically rent out the VLCC for 1 year, the rates moved from 50K per day to 70K per day, and the CEOs weren't rushing. Doesn't seem like they were rushing to do it. We'll see if in the earnings, if they announce that they did. But the point is that they seem to think that they can do better. And if you look at a company like DHT, and I say that just because they are a VLCC pure play, if you look at what their earnings would be, locking in their entire fleet or some of their fleet at 70K per day, well, that's nice, some nice earnings. So obviously, again, they think they can do better. We'll have to see if they can. So the supply and demand dynamic is very tough to measure and extremely multifaceted. In addition to there being many different subsets of the market, each with its own slightly different supply and demand picture, you have the fact that there are a number of external factors, such as sanctions and ships being used as floating storage, that make the exact numbers and picture impossible to measure. Now, on one hand, you have those disruptive factors, such as, well, the sanctions, the storage, etc. On the other hand, you have fleet growth and scrapping, which is a separate issue. And on the other hand, you can't really know exactly what each of these factors is going to give you. For example, the sanctions can come off, or they could get worse. And you really can't know until it happens. And so the only thing I wanted to mention specifically on that point, that something I noticed or that I read, is that even though the rates have been fairly elevated in December and January, you have seen, at least in the new year, a few vessels that have been scrapped, meaning their owners either couldn't have their life prolonged or didn't believe that the rates would necessarily stay this high. And so they just let them get to their natural end. Now, this isn't to say that everything is neutral or bullish. There is alternative views, as always. Lloyds List, for example, Lloyds List Intelligence said recently in a commentary that even though their ships, or the order books rather, are at their decade or 20-year lows, however you want to call it, depending on the market, they are still way too large. That's their words, not mine, in certain areas. So they commented that fleet growth could be up to 4 times what trade growth is, and that would mean additional price pressure. And they noted that although the order book is smaller than it was in recent years, only 1/5 of that amount, the amount of the order book that is currently part of the fleet in vessels that are over 20 years old. And I know I butchered saying that, but what I meant is, well, I'll write it down. But basically, there's not a lot of old ships. And if they're right about this bad concoction of decreasing compound annual growth rate and not a lot of old ships, not enough to compensate for the too large modern order book, well, then it's possible that the market could still take a few years before it has the chance to potentially recover. And that is if someone doesn't mess something up in the meantime. But again, they were very general with these points, and there are some markets that look better and some markets that look worse. So it's really important to drill down where you're talking about. Now, when we're looking at the equities, there's been a lot of volatility, especially recently, where some have dropped, I don't know, 20%, maybe more, very quickly. Now, on one hand, the rates have moved off the highs. So if people were expecting 150K VLCC rates all year, that doesn't look like it's happening because it's already moved down. Now, could it go much higher later? Who knows? But it isn't steadily there, which, as many in the industry would expect, because it is very seasonal. Now, who knows what the market was hoping or pricing in, but with these move down recently, a lot of the equities are trading at a lower price than before the fourth quarter when they had some insane earnings. And you'll have to look at the specifics to, well, actually, they haven't reported the fourth quarter earnings yet, but I'll get to my thoughts on that in a second. But they're lower than they were before these months of decade high earnings. And the other thing I noticed is the equities. Now, I looked at this a few days ago, and it was actually comical. I was laughing about it with someone. That the tankers were just tracking oil. I looked at a 3-month chart. I pulled up XOP, which is the oil producers. I pulled up Scorpio, and I pulled up DHT, I believe. So that's a clean, a dirty, and oil producers, and they had the same chart. And so I don't know how much of the day-to-day moves is tracking oil. Now, in the past few days, it has deviated from that a little bit, but I'm still wondering if the market is actually looking at what the earnings of these stocks are specifically, or just kind of taking thoughts based on day-to-day moves. So we'll have to see. Now, when we're looking at the earnings, which start in a few weeks, it looks like almost across the board, the earnings potential, or the earnings rather, of the fourth quarter seems to be underestimated. Now, I can't say this universally, but all the things I looked at, well, the things I spent the most time looking at or own, I look at and see, well, that looks like it's going to beat expectations, and they probably raise guidance, and they probably raise the dividend. Now, obviously, not all are focusing on dividends. Some are focusing on paying off debt or buybacks or whatever. But the point is, it looks like all of them had such a good fourth quarter that I would expect them to beat what was expected. Now, who knows? Maybe the market knows this already, but maybe it doesn't care. Maybe it's only looking forward and decided that even though it earned $1 a share, well, it's not going to continue, so it doesn't matter. I don't know, but I think that most should look something like beat and raise and raise. So always when making an investment, you need to do your own work, make your own decisions, and place your bets accordingly. But the one thing I wanted to point out is from here, it is definitely a two-way bet in both sets of tankers. If it falls back to where it was at, well, at the bottom of the cycle so far, or even lower, well, then that's some significant downside. And then on the other hand, if it goes significantly higher and has a real, well, shipping cycle, if you will, well, that is significantly higher also. So you have to look, and when I'm looking out at who's picking which side, you have on one side Howard Marks and Peter Lynch, and on the other side you have an industry which doesn't have much access to money, but realistically, it may be balanced. And if it is balanced, then there's no reason to get too excited at this time. But it's important to look out at what you think is going to happen and what the potential is on both sides. And for that reason, I wanted to include both sides in this video. So thanks for watching, everyone. I think that's enough for today. There's a number of rabbit holes I'm sure I could go down with if this trade thing happens or that trade thing happens. But realistically, trades shift every day, trade routes, and that all changes shipping. So I hope you enjoyed, and until next time, have a great day.